brand new day. We've come to the end of the week, but it'll turn out to be a very big day given the fact that all eyes will be on the MPC meet outcome. Remember that you have the new RBI governor at the helm, a lot of hopes riding on the 25 basis rate cut. But let's wait and watch. 10 a.m. is when the announcement will be out on MPC rate decisions. But let's talk about what the global markets have done in overnight trading session, because if you look at the overnight trading session, your S&P 500 as well as Nasdaq that logged in positive move, but it was Amazon that actually slipped post the hours on back of the weak profit guidance coming in. All eyes today will definitely be on US jobs data. Weak numbers could actually fuel the Fed rate cut hopes, but let's wait and watch which side that goes on. But if you talk about the dollar, easing is on the way when you talk about the dollar index, Nikunj, and that hopefully should augur well for all of us here.
See, we can just quickly wrap through the global cues and say, okay, nothing. Why? Because there's nothing, frankly, from there. 30 seconds, if you just look at the global setup, all I would say is that everything is just static. Just static. No fear in terms of, no excitement and no fear. There is no excitement from the US earnings season, and so far there is no fear about how the tariff war and other moving parts in the global market would move. So it's a static handover, and you pretty much are likely to keep all the global cues on a back burner today, because that's not going to be the influencing factor for the trade today. Dollar index, I like it. 10-year paper, 4.8 becoming 4.4. Again, I appreciate that. And then volatility has got crushed from levels of 19, 20 to 15. So static, standard, boring, but predictable. That is the global setup for you, and which frankly is not a bad outcome. So from the global market standpoint, I think strength, stability and static. These are the three words for me.
All right, that's about the global setup. But back home, the markets were seen to be in a little bit of a wait and watch mode, because sectorally, yes, we have seen pharma was seen to be in pink of health. Other than that, select IT names were doing well. But yesterday, what we have seen that FMCG was once again seen to be a bit under pressure. Talking about the broader markets, there too, the picture wasn't that great. But Nikunj, what to read from that, and also help us understand that since today is a big event day, so what should be the trade setup looking like, and how is it looking like pre and post the event?
See, there would be an element of event, event of the MPC meeting will certainly have an impact on the markets today, both in terms of absolute move and also in terms of the positioning and the underlying breadth. Let's look at what essentially is the case here, and why is the MPC important? Why? Because if you come on the right side of the event, Nifty easily could see a bout of short covering, because markets are getting more and more convinced that the new governor will recognize that, look, the economy needs to be approached differently. And if the governor obliges with a rate cut, indicates that more are coming, he would tell everyone that I care for you, which is that I will give you liquidity when you want. And the slowdown is something which really needs to be now addressed, because government has done the heavy lifting in terms of taking the fiscal heavy lifting. Now it's the monetary part which Reserve Bank of India would take. If he is able to strike the right chords, I will not be surprised that markets will see a bout of short covering. Conversely so, post-budget, since the puck has moved from North Block to the Mint Street, any disappointment there and along with this FI selling could lead to downside. So today I would say maybe it's the last calendar event, but it is important from a market standpoint. It could just be a swing event of 1 to 3% for the Bank Nifty, maybe 3 to 5% for smaller banks, maybe 2 to 3% for NBFCs. So it's not just one of those ordinary Fridays where MPC is going to be predictable, because it's a new governor, the time is different, the environment is different, the setting on the table is different, and the participants sitting on the table, they may be old, but they want to eat a different, they want to see a different menu.
Absolutely. They want to see a different menu, and maybe MPC meet outcome could be the decisive factor, at least for today, whether the markets would leap or go ahead and slip. But is it the right time to cut rates or stay put? Listen into what Swaminathan Iyer, who is the consulting editor, told us on the MPC stance.
The Reserve Bank of India for 2 years has not changed the interest rate. And it's being attributed with all kinds of glowing attributes. It has done this, it has done that. I mean, if you just rolled King Log into the RBI and appointed it as the governor, the situation would have been the same. So I am very skeptical that it makes a big difference. As to whether or not they may do it, they will be under pressure from the finance ministry. Now, whether they are going to be very obedient servants of the finance ministry or get some independent spine and risk the fate of Urjit Patel, I do not. But I would simply say that if I was in the RBI myself, I would say we don't know what's going to happen. Just wait, don't be in a hurry.
What is a template? And I'm just going to break this for our viewers, that what is the template which essentially could be at play. First is growth, second is inflation, and third is liquidity. Now these are the three factors in which you can really judge what the Reserve Bank of India could be thinking. Growth has come down. Both credit growth is down and GDP growth is down. Then there is inflation, which is great news. It is perfectly aligning. Of course, the moving part is global risk, tariff wars, but at any point in time there is some risk or the other. But the headline number for everyone is that inflation is under control, but 8.2% growth becoming 6.4. No, that's not something what you want to see, because economy is contracting or has contracted. GDP is also down. Credit growth is also down. And then there is liquidity, which was surplus same time last year, and now it's negative. That is where the challenge is. That liquidity along with the rate cut, I think it's the need of the hour, and that is something which could be at play. So there are two ways you can really stimulate economy. First is fiscal, second is monetary. The fiscal part has been taken care by the government. They've given tax break. They're ensuring that the fiscal discipline is not compromised. Expenditure is going up by 10%. They've done that bit. So from North Block now, it moves to Mint Street. And from a market standpoint, today's indication, because this is the first MPC, from the first MPC of the new governor, it is coming after a good budget. It is coming when the economic backdrop is different. It is coming at a time when rupee is at a record low. I think the importance would be immense, and that is something which could have considerations going forward. But I'm going to change gears and go back to FIs. Why? Because just when we make a case that foreign institutional investors should be coming back, they are not making a comeback. Now that dollar strength is reversing, now that the yields have started reversing, is there a case for A, emerging markets to get flows, B, within that, India to get flows? Cameron Brand